Good morning, everybody, and welcome to the ARMR Investing Way, our virtual hedge fund experience. We're going to go over risk monitor, macro, big picture, what's changing, what may change. Want to go over our top shelf stocks to watch from last week and see what they've done. And then today we'll make a new list and keep building those lists, see how they do each week. At some point, they'll begin to run away on the upside and we'll know the market is changing. So we're going to look over some of those names and just talk about how we traded yesterday and what we're looking at and how we're going to position ourselves today. So don't forget your portfolio manager on the desk, this virtual hedge fund, you're a hedge fund manager, and what you're doing is you're also the risk manager of your own assets. So take the information from here and wherever else you're gathering information and make it your own and be the smart money. Make your own choices. Okay. So, geez, this is a story of the Magnificent Seven getting shot. You know, it's almost like the end of that movie where a couple of them survive. Who is it going to be? Maybe Microsoft had a decent reaction to earnings yesterday, but the other 493 in the S&P just look awful. You know, we've been talking about this for a while. So here's the equally weighted S&P. This is nothing new. We'll just go over some charts real quick. Equally weighted S&P in a clear downtrend. The death cross was here. We talked about that. The risk monitor went red there. And so we've avoided this collapse, and the market closed at a new low since the selling began. We also saw a new low in the small cap index. You can see that right there. Okay, new low since we got the risk monitor red signal. NASDAQ 100, Magnificent Seven names. They made a new low yesterday, taking out that double bottom low. And then the equally weighted NASDAQ 100 looks even worse than the equally weighted. In other words, tech stocks are taking it in the teeth. That looks terrible. Something's really wrong with the equally weighted NASDAQ 100. Okay. So we look at the Magnificent Seven, and a couple have really gotten destroyed on earnings. So we're in earnings season. We see Tesla gap down, and it was pretty ugly there. Google got whacked yesterday. Meta's getting whacked about 4% today. So that doesn't include today's action. This will be down here somewhere. So that's a breaking down of a double top. They're not even waiting for the Amazon number today, which comes out tonight. Stock's already getting whacked alongside of Google and gapping down again today. So, you know, what's been able to hold up? Microsoft had a better than expected. Look, some of them, even Meta had a better than expected result. So it's the reaction to the news, not the news that matters. What's the reaction to the news? Microsoft was able to hold on to those gains. But, and NVIDIA is still holding up. They don't have earnings for another 20 days or something. So, who knows where that stock is going to go. But the Mag 7 looked terrible. Can only imagine what's going to happen to the Townsfolk if this you know continues. You know, I don't like carrying shorts overnight. I don't like carrying puts overnight. But I just couldn't help myself. Those of you who traded with me right up until the end of the day yesterday, you know, I kind of sheepishly looked at you and I was like, well, maybe I'm going to own some puts overnight. So I've got some puts on the Dow and the small cap and the NASDAQ 100. And the reason I did it, and I'll probably regret it, but I didn't take a big position. I just had to get a piece because the hair on the back of my neck is standing up. I mean, I'm not a guy who likes to make predictions. I tell you, let's read and react. You know, just when the market feels it's like a disaster, it reverses and goes higher. So look, I don't know. By the end of this week, there could be a huge reversal today, tomorrow. Then it's a double bottom in the market that tested the lows during the week but closed higher, and it'll be a different conversation tomorrow with the close if that's what the market does. But as of right now, if the selling continues, I'm very disturbed. I feel like the market is heading towards, you know, that dislocation lower type of moment, you know. So when I say I'm disturbed, I'm just disturbed looking at the market. For our portfolios, it's, quite frankly, it's fantastic. Well, let's be honest. We're sitting in cash, collecting 5.5% in treasury bills since the 15th when the risk monitor went red, and the market's going down big. So we have alpha like this since the 15th. So, for over a month now, the alpha in ARMR portfolios has gone straight up simply by sitting and collecting interest. And then on top of that, we're following the ARMR carry trade strategy, and stacking chips on top of it when we can. That's a tortoise and a hare type of conversation, right? We're not looking for the portfolio to skyrocket in a week. We're just looking to stack chips. We're just a tortoise, right? And at the end of 6 and 12 months, we look back and say, wow, look what we added to our treasury bill rate of return. We've got these gains on top of it. So that's a longer a play that requires focus and execution every day, not leaving the desk, trading both directions right now, long and short, depending on what sets up. So we're going to continue doing that. The key right now, if I haven't already made this clear, is principal protection. There'll be more than enough time to capture upside when the market turns. Right now, protect capital and you don't have to take risk right here. It's totally acceptable. In fact, it's probably the right thing to do for most people. Just collect your interest and wait. When the algos go positive on the NASDAQ 100 and the S&P 500, we'll start putting money to work. When the risk monitor goes green, we'll put more money to work. We'll see what that algo entry point gives us. Could be the beginning of the next major bull market. Could just be a quick swing trade. That's all we have to do. And between now and then, you don't have to be in there fighting it out every day. Now, if you're like me and you enjoy it, and you get up every morning, you can't wait to trade, well, then I'm here and we're going to work together, and that's great. But I just wanted to share that with anybody who's, not sure what to do in here. It's very simple. Do nothing. And I totally do not recommend getting short the market. I mean, let's look at this morning. This morning's situation looked like I was going to get paid on my puts. Looked like it. Then we had some economic numbers that looked to me, at the face of it, to be stronger than expected, which should put treasuries down, and normally the market would follow, and yet treasuries are up 0.5% right now. So the market's rallying. So short selling is not where you want to be. The average investor, for like 90% of investors, you don't want to sell short. It'll just totally spin you around. There'll be a couple of huge days of a rally. You'll lose money. Then you'll try to get long, and then the market will crater, and it'll just compound your errors. So don't even worry about it. Just stick to your research, build your whiteboard, watch the whiteboard, see if some of the names on the board start to go up. If they do, then maybe the market's changing. So this is what I mean about that. Let's just look at what did we have on our list last week? Last Wednesday, we put together this list, and I said, okay, let's see how they do. I mean, we don't want to buy these names, but we had Adobe on the list. It's fallen off the list. Okay, we had Google on the list. That was a disaster. Okay, Microsoft is on the list. That's going to hold up. Meta was on the list. That already broke down, so that's out. SNPS was on the list. Synopsys, that's broken down. That's out. CrowdStrike and Palo Alto are still on the list as they're above the moving averages and the uptrend. Okay, so they're not performing well, but they're not out yet. Meanwhile, OKTA got destroyed. Okay, so out of that list, the only ones that made it were Palo Alto, CrowdStrike, and Microsoft. Let's see how they do this week. All right, and then I go to the ARMR power play names that I like Trade Desk. That broke down. Over. Pac Bio. I always said this was a 2024 story, and we're going to be able to get it cheap. Oh, this is going to be great. Whenever this thing turns, I'm going to be buying Pac Bio. It's only getting wrecked because the market's awful and small caps are getting destroyed. They're going to gift us this stock into the end of the year. Maybe even December it turns. Could be a huge stock next year. Confluent breaking down, Braze breaking down. These are all my favorite, power play names. They all got whacked. Palantir went nowhere. The only ones that made it from that list, Kratos and AVAV. And it's no surprise, those are the defense stocks. Those are the defense stocks. Not a surprise those two made it. Everything else fell off the list. And then we had our energy stocks on the list. And while they haven't gone anywhere, they haven't gone down too much. Like EQT is still there. The energy names, Range Resources, Silverbow. These things are all kind of making LNG. There's nothing wrong with them. FTI, still above the 50-day. Tidewater still above the 50-day. The only ones that fell off the list are the refining stocks. So I don't understand why that is. But there goes Dyno. No reason to own that. There goes Valero. That looks terrible. So the ones that held up best were the energy stocks during the week. And that's not a big surprise. I mean, that's the type of market we're in. So energy stocks held up best. Most of the other stocks on our list got destroyed. And this week, what we want to do, I'll probably do it today with you. We'll go over all of our O'Neill lists, see what looks good, put it into the captain's log, and then look at it next week. How many of them worked? How many of them cratered? If we start to see the leaders actually go up, that will corroborate if we get a algo recovery and some of the leaders on that list are going up. Say, okay, maybe it's time for us to take a little bit more risk, but nothing to do right now. It's so funny. Yesterday I had last week I shared with you our 100 what a 100% down day looks like trading the indexes. It's so funny. It was word for word. What I wrote last week on this day is exactly what happened again a week later, which is 100% down day trading the S&P. So we had no trades on the long side in the ARMR carry portfolio because it was 100% down day. And literally, if you look at the captain's log from a week ago, it was exactly the same. It was 100% down day on Wednesday. I don't know what to make of that. I don't know if that's just coincidence or Wednesdays are a day for us to, look out below, Seems like the market tries to recover Monday, Tuesday, then gets slaughtered on Wednesday, and then sells off, Thursday, Friday. Well, let's see if that changes today. But that's been the gate, if you will, the gate of the of the breakdown. So Wednesday was another 100% down day, and this is what it looks like. Some of you may have been curious, why wouldn't I get long the gap down in the reversal right in here? Okay, there's the gap down. This is the gap down, okay, from prior day's close to the open. Don't forget the black dots are the VWAP. All the different lines are PMP lines, ARMR Price Movement Profiler Algo. Standard deviations 1, 2, and 3 above and below the VWAP. Fibonacci extensions above and below an opening range, and then the average true range high and low. Okay. So you might have thought to yourself, well, why am I not buying the move back above the VWAP? Okay, because very often that's a buy trigger for us. Gap down, go back above the VWAP, we get long. We did that on Monday and had a huge day. We didn't do it yesterday. And the primary reason is the size of the gap down. So this is something you can write down in your notebook. A gap down of like 0.5%, totally reasonable. That's what happened Monday. Gap down 0.5%, hold, reverse, go close the gap. But if the gap down is 1% or more, you've got a serious problem on your hands. The market, is imploding is what that is. So if it gaps down 0.75% or 1% or more, then the first rally attempt that day is going to fail a significant amount of the time. And I don't have a statistic for you, but probably 90% of the time. If it's a big gap down, that first rally is into the overhead panic. And so anybody who's trapped in the gap down, when it rallies, they throw up on it as soon as it rallies. The way to make money buying a gap down that's big is not on that first move, but on a move later in the day. So this is very important because we're probably going to get to this point in a market like this. It sells off, sells off, sells off. Then it has just a couple of awful down days. And it'll gap down 1% one morning. And it'll go down. And then what you're going to look for is an 11:30 to 1:30 type of setup. Sometimes it happens at 12, 12:30, times that I don't usually like to trade. But on those days, you can't leave your desk. Because if it's sell, 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 gap down big, sideways for a few hours, and break above VWAP, then I'll get long. That's in the day trading playbook. That's a rare trade. It doesn't show up very often. Usually the 1% gap downs do what happened. They do what yesterday did, which is 100% down day. Just every rally gets met with selling. But every now and then, a face melting rally will unfold after 100% down day, but it starts later in the day. It takes a few hours of not going lower to get the guys who are short or own puts to throw in the towel and book their profits. And when they start doing that, the market rips. Okay. But that wasn't the case yesterday. We're not there yet. And so we didn't get long on this trade. And instead, when the market broke down right here, we started shorting the NASDAQ, the small caps, the Dow. We ended up making money. I think it was actually the NASDAQ and small caps what we shorted yesterday. And we cleaned up making money short NASDAQ and small caps. And that looked like this. Here's the NASDAQ picture. Let's go like this. Okay, so when the market, when this broke down, we were getting short, right? Maybe I can blow this up for you. Okay, so what we were doing, instead of shorting the S&P, when the S&P broke down, we were shorting the NASDAQ and it cratered. You know, and the same thing. We got short. The small caps, they didn't crater as much, but we made some money there. Okay. We got short in here and it sold off in here. We made some money. Okay. But the real money's made on the NASDAQ 100 right now because the leaders are getting shot. That's what's going on. All right. So I was just going to round out this conversation this morning with a quick view. Oh, I wanted to show you this chart right here. All right. So just in case you wanted to know what it looks like, the Magnificent Seven stripped out of the NASDAQ one of the S&P 500. These are the other 493 stocks. So you got the Magnificent Seven, and then what I like to call the miserable 493. So you can see they're down, they're down a tiny bit on the year, while the rest of the Magnificent Seven are up about a little less than 10% on the year. And that's coming down quickly. I mean, we'll see where the year ends because they're starting to really get after the leaders. But there's just graphic representation. I don't think it needs any more explanation of what has been a very strange year this year. On the face of it, indexes are up, but not really. On the face of it, 7 stocks are up and everything else is getting destroyed. And we're not even looking at small caps that have been annihilated. So, food for thought there. Today, we're going to go out. Treasuries are up about 1/3% on what I thought would have been negative news for treasuries. So that's interesting. And we're just going to read and react and get on the next carry trade. So what are the markets doing right now? NASDAQ off about 0.5%, S&P off about 1/4%. So those are small gap downs that could create really great risk on opportunities this morning. That's what we'll be looking for together. I look forward to seeing you on the desk. Remember, everybody, take the information that you're gathering, figure out your strategy, execute that strategy, and be the smart money. I'll see you guys on the desk.